Welcome to the Finance Break. Today, we're diving deep into an investment strategy that could reshape your financial future, living off dividends. Specifically, we're looking at the Schwab US Dividend Equity ETF, also known as SCHD, and how much you'd need to invest to generate a steady income stream just from its dividends. By the end of this video, we'll also explore some solid alternatives to SCHD, so let's get started. For those who aren't familiar, SCHD is one of the leading dividend-focused exchange-traded funds, ETFs. Launched in 2011, its goal is to track the Dow Jones US Dividend 100 Index. This index includes 100 high-quality companies that consistently pay dividends. Essentially, it's a basket of companies that prioritize returning value to their shareholders. Currently, SCHD boasts a competitive dividend yield of about 3.5% and comes with a ridiculously low expense ratio of just 0.06%. So what does this mean for you as an investor? More of your money stays in your pocket, working hard for you. The structure is simple. Invest in high-quality dividend payers and collect a steady cash flow. You've probably heard of people living off their dividends, but what does that actually look like in practice? Imagine a world where your investment portfolio generates enough income to cover your daily living expenses. No need to sell off assets or dip into savings. Living off dividends means that the income you receive from your investments is enough to pay for everything: rent, utilities, food, and more. And the best part? Your initial investment remains intact while you collect regular payouts. It's like getting a paycheck just for holding the right stocks or ETFs. Before we dive into the math, let's talk about how much money you need to live off dividends. The first step is figuring out your annual living expenses. A modest lifestyle in the US could run you about $30,000 per year. But if you live in a major city or have a family, that could easily rise to $50,000 to $60,000. On the other hand, a minimalist lifestyle in a more affordable area could mean you're looking at something closer to $30,000 to $40,000 annually. For simplicity, we'll focus on 4 scenarios: $30,000, $40,000, $50,000, and $60,000 per year. Now, the big question is, how much do you need to invest in SCHD to cover those costs? Now, let's break it down. How much would you actually need to invest in SCHD to cover your living expenses? With a 3.5% dividend yield, the math is pretty simple. Take your income goal and divide it by the yield. Here's how the numbers look for a few different income goals. For $30,000 in annual income, you'd need approximately $857,000 invested in SCHD. To generate $40,000 annually, you'd need about $1.14 million. For $50,000 in income, that jumps to $1.43 million. And to cover $60,000 in living expenses, you'd need around $1.71 million invested. As you can see, the more you want to live off your dividends, the larger the initial investment needed. But remember, these numbers are based on a steady 3.5% yield. Market conditions and fluctuations could impact that yield, so it's essential to keep that in mind. Now that we have the numbers, let's add some layers of complexity. There are 2 big real-world factors to consider: inflation and taxes. First up, inflation. Even though it may not seem like much, inflation steadily erodes the purchasing power of your money over time. For example, if inflation averages 3% annually, your $30,000 a year today could cost $35,000 in 5 years. That's where SCHD's dividend growth comes in handy. Historically, SCHD has increased its dividend payouts by around 9 to 10% annually, which, if it continues, could help offset inflation's impact on your cost of living. Second, taxes. Dividends are taxable income, but the good news is that SCHD pays qualified dividends, which are taxed at a lower rate than regular income. Depending on your tax bracket, you could pay anywhere from 0% to 20% in taxes on your dividend income. For instance, if you're in the 15% tax bracket, that $3,500 you earned annually from your $100,000 investment might be closer to $2,975 after taxes. Let's shift gears and look at SCHD's performance. Since its launch, SCHD has delivered consistent dividends and solid overall performance. On average, it has returned about 12% per year, combining both capital appreciation and dividends. While past performance is no guarantee of future results, SCHD's track record is strong. For investors who reinvest their dividends during the accumulation phase, the compounding effect can significantly boost your portfolio. But keep in mind, the stock market can be unpredictable, so you'll need to stay patient and stick with a long-term strategy. While SCHD is a great option, it's not the only one out there. If you're looking for alternatives, here are a few solid choices. Vanguard High Dividend Yield ETF, VYM. A similar option to SCHD, VYM also focuses on high dividend-paying companies but has a broader selection of holdings. iShares Core Dividend Growth ETF, DGRO. This ETF focuses more on companies with strong fundamentals and the potential to grow dividends steadily over time. iShares Core High Dividend ETF, HDV. If you're after higher current income, HDV might be a good choice, but keep in mind it has more concentration risk in specific sectors like utilities and energy. Each of these ETFs offers something a little different, so it's worth considering what aligns best with your financial goals. So there you have it. Living off dividends from SCHD is possible, but it takes careful planning and a substantial initial investment. If you found this video helpful, make sure to hit the like button and subscribe for more in-depth financial content. And if you have any questions or want to share your own dividend strategy, drop a comment below. I'd love to hear from you. Until next time, keep investing wisely!